Hey, welcome back to YT Finance, and today we are talking about Workhorse Group's growing competition in the electric last mile delivery sector. Specifically, we're going to be talking about Canoo stock, which is going public through a special purpose acquisition company, also known as a SPAC. Remember to like this video right now for more electric vehicle stock news updates. Subscribe if you are new. If you are already subscribed, then hit that like button. Comment down below your thoughts on Workhorse stock, and let's make you some free money with Webull. Webull is a brokerage where you can buy and sell stocks, options, and cryptocurrencies easily. Right now, if you make an account with Webull, they will give you 2 free stocks, each worth anywhere from $2 to $250. And if you invest $100 or more on your first deposit, you will get 2 more free stocks, each valued from $8 to $1,600. You are basically guaranteed to make $20 or more if you cash out immediately, or you could luck out and receive up to $3,200. Not to mention that you also have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google, Procter & Gamble, or Heinz. To get this offer, just tap on the link in my description box down below and do it quickly because this offer ends on New Year's. And without further ado, let's jump into today's electric vehicle stock article. Canoo is one of the newer electric last mile delivery competitors that seeks to dethrone Workhorse Group with their multi-purpose van that costs around $30,000. Canoo's commercial vehicle was announced 5 days before, when their shareholders will vote to take the company public through a SPAC merger with Hennessy Capital Acquisition Corporation, whose ticker symbol is HCAC. This merger is set to raise Canoo around $600 million, which will be put toward further developing their delivery vehicles, which come in 2 different sizes. However, Canoo's vans will come out in a limited manner throughout 2022, but mainline production will take place in 2023, with pre-orders only costing $100 to reserve a vehicle before paying in full. Canoo is based in Los Angeles, and they develop and design electric cargo vehicles that are ideal for transporting smaller deliveries but more often. By now, you all probably know that Amazon has partnered with another electric vehicle delivery company named Rivian, who we will talk about later, and Arrival has also come onto the scene, who was hired by UPS, not to mention newer companies like Canoo and Elms are also trying to get into the last mile delivery market. So Workhorse Group better get their act together before other electric last mile delivery makers enter the market. Canoo says that they are the best in-class total cost of ownership vehicle to cargo volume, and that they are the best cost-effective option because of their cheap price tag, high roof height, and storage lockers. Plus, they have the classic roll-up style door and ramp similar to a U-Haul truck. Canoo vehicles have ample space up front, so the drivers have space to put laptops and other electronics. The vehicle also comes with a bi-directional onboard charger that can be used to power tools or electronic equipment, just like a Ford e-Transit van can. Canoo's target markets are last-mile delivery providers, delivery fleet companies, major retailers, or large logistics companies. Canoo even gives these customers an option to co-develop a custom vehicle for their specific company needs, which they are more than willing to help build for them. Canoo is just the latest company in a long line of other SPAC companies to invade the electric vehicle market, which include Hyliion, Nikola, Lordstown Motors, and Arrival Stock, along with many others that I have talked about on this channel. Most of these companies are still in their infancy, which makes them very high risk. But on December 21st, 2020, shareholders of HCAC will vote to take Canoo public, which will transform their ticker symbol into GOEV. Right now, I want to talk about Rivian, who I personally want to go public because they are an electric vehicle giant that has already grown. Their vehicles have exterior cameras that allow their drivers to see a 360-degree view around their cars. Rivian's designs are also very unique. Their vans are zero emissions, and they already have great relationships with very high-end customers. Just listen to these quotes by Amazon's Director of Global global fleets, and I quote, "When we set out to create our first customized electric delivery vehicle with Rivian, we knew that it needed to far surpass any other delivery vehicle. We wanted drivers to love using it and customers to feel excited when they saw it driving through their neighborhood and pulling up to their homes. We combined Rivian's technology with our delivery logistics knowledge, and the result is what you see here, the future of last mile delivery." Personally, I like Workhorse's technology better and the look of Canoo's vehicles, plus Arrival vans and buses are always looking on point with their aesthetics, but besides design, Rivian means business landing such a great contract with Amazon. Here is what Rivian's CEO had to say about this, and I quote, "Prioritized safety and functionality to create a vehicle that's optimized for package delivery. We thought through how drivers get in and out of the van, what the workspace feels like, and what the workflow is for delivering packages." Amazon has ordered 100,000 Rivian vans, where some of this order will be delivered in 2021, with 10,000 of these vehicles being distributed worldwide in 2022, and all 100,000 vehicles on the road by 2030. Without taking into consideration inflation or other economic factors, at face value, this contract could have been worth $3.5 billion, which is a lot of revenue. Rivian vans also have high-tech sensor technology and traffic assistant controls. They have integrated route information, a reinforced driver door, 3 levels of shelving, and a 150-mile range. Besides Rivian, Workhorse is still one of the top electric last-mile delivery makers, but they better act fast before these other younger companies pass them. This just makes the USPS contract more important for the future contracts. I believe the best strategy right now for Workhorse stock is to hold and wait for the price to spike again. Then you make a personal decision if you are going to sell or hold. However, when the stock price rises due to anticipation for the contract, it will be hard for you psychologically to sell. Likewise, if you plan to hold long term, be mentally prepared for the stock price to react to the USPS contract news. Workhorse has analysts scratching their heads and debating with each other. An analyst from Cowen says that Workhorse stock is worth $23 and says to buy it, while another analyst named Craig Irwin, who used to be a big Workhorse bull, says to hold. So many analysts are on the fence, but the majority of analysts either say to buy or hold the stock as of right now. 2020 has been a great year for Workhorse stock, Tesla stock, and NIO stock, and the trend is set to continue, but not without corrections and pullbacks. Workhorse still has weak fundamentals and financials, but the USPS contract can fix this problem. However, if you are only betting on the USPS contract for Workhorse stock, that may not be wise at all because nothing has been set in stone as of yet. While Workhorse stock's future gains are unknowable, I am still bullish because I believe in their technology, but just not at these prices. I am in it for the long run, so please make sure you do not get burned on this stock if you plan to short it or trade it. Likewise, know when to abandon a lost cause. Like this video right now, subscribe if you are new, comment down below your thoughts on Workhorse stock, and I will see you in the next YT video.